its peers in the region will be a threat to economic recovery. Nomura is at least the third agency to cut its GDP outlook for the country just this week. Fitch Ratings and the Asian Development Bank had earlier trimmed their growth forecast as the Philippines continues to struggle in containing this pandemic. Okay, guys, kicking off the market report with some fresh economic figures. You can see on my Bloomberg terminal here. Let's kick off with the balance of payments. The deficit narrowed to $73 million in the month of March. And you can see that on my terminal. There you go. Okay, so $73 million of a BOP or balance of payments deficit. That is the third straight month of a deficit. That is, of course, as our government continues to pay all of our dollar obligations according to the Bangko Sentral. However, this was actually 96% smaller than what we recorded in February. Now, recall that, still by the end of March, we do have dollar reserve levels that are enough to shield our economy against external shocks. We have 12 months worth of imports and goods of payments and services. Let's just take a quick peek at how our local unit is performing this morning. On the back of that, you can see us actually strengthening quite a bit here, 48 spot, 180 to the greenback this morning, closing in on breaking below that 48 level. Now, one thing, however, that is still very worrying. This is the hot money, which has now been a net outflow that has exited Philippine shores. $541 million that we've lost. This is again, according to the Bangko Sentral, this is the month of March, the net outflow, the biggest we've seen in 10 months, but nevertheless 44% than a year earlier, but it's still significantly a bigger outflow than we've seen in the month of February. Now, of course, a lot of things that the BSP has pointed and attributed this investor reaction, for instance, to the rising inflation print in March and also the vaccine rollout and, of course, the surge in the virus cases in that month, as well as the heightened restrictions. Now, ING Bank's Nikki Mapa is saying that investors started moving to safe havens in March, also as the benchmark rates in the US started inching up. Now, let's look at our open here, 63.24. That is down by 0.4%. Now, this follows what we saw in Wall Street as a record high, which seems to be paring back there. When you look at the futures, the US had reported an expansion of 6.4% of GDP year on year in the first quarter, and they had also reported that jobless claims fell to a fresh pandemic low. Now, recall that yesterday we had traded in the red most of the trading day. You can see that on my terminal here, that downward trend. But then towards the end, the analyst had said that there was a lot of last minute bargain hunting, and this, according to FMIC's head, Tina Ulang, the 6,300 has proven to be quite a strong support level. Chris Mangon is attributing this pickup towards the end, towards to the lower reported COVID-19 cases. And finally, just a quick peek on the malls here, especially as the focus will be on them this morning. Malls and restos, that is, the IATF has now allowed 10% capacity when it comes to indoor dining and 30% for the personal care, things like barber shops and salon, at least in MECQ areas. We recall we had Castelo on Business World Live yesterday afternoon saying that the DTI is proposing even allowing outdoor personal care services at 50%. Now, here to discuss all of these developments and more on the last trading day of April, we have with us Edser Trinidad. He's the head of investments and research at First Metro Asset Management. Good morning, Sir Ed, and welcome back.
Good morning.
Sir, it's the end of April. It feels like the days just rolled by here. But of course, some silver linings here, little reopenings, what they call a flexible MECQ here. Will these flexible easing or of the restrictions be enough to quell all of these fears that we've had in the past couple of months?
I think most of the investors right now will remain on the sidelines. I think in terms, at least in somewhat, it is some concerns, considering that first of all, the infection rate has started to go down. But however, it remains high. So this is, I think, one of the major one of the major cause for concern among investors. So I expect that I think over the couple of days, we may still be seeing the market to trade on a very tight range.
Sir, do you agree that this 6,300 level has proven to be strong support? And if so, is there room for upside? Are the risks you're seeing tilted more towards the downside, especially since we've been trading below the 200-day moving average? Or is there actually room for higher valuations?
I tend to agree that I think the 6-3 level is has somewhat formed a very strong support. I tend to believe that we're basically risk is more of the upside rather than downside. First of all, as what you mentioned, reported earlier, we've seen some net foreign outflows continue as of March. However, if you look at the average ownership level among foreigners among Philippine companies, is now at about 18%. So
Mm-hmm.
I think this is the lowest level that we've seen over the past 10 years. And I think in terms of continuing foreign selling, we now be seeing that foreign selling will be smaller moving forward. In addition, I think what's also keeping the company, the market afloat is basically the domestic market. A lot of our domestic investors are basically stirring up issues that they believe have already reached their bottom, and therefore they already have, I think, more of the value. Um, uh, that's basically the outlook among domestic investors.
Sir, what is keeping domestic investors positive compared to the foreigners? Why is it that we continue to buy in and buoy the markets at the 6,300 level, as you mentioned, and yet we are seeing a pain and exodus? And when is this pain going to end, especially as the global markets and equities have started picking up and
Mhm.
there's even a flow towards emerging markets?
I think first of all, in terms of the domestic, I think domestic investors have a better sense of what's really happening in the economy. I think the bottom line here is um, it's vaccine. Once vaccine will start to arrive substantially, therefore, confidence in the market will return. And that should uh, allow the government by opening the market uh, by opening the market further. And as you've seen in the past, if the government when the government reopens the economy, you've seen there's a really pent up demand. So I think that's basically where the domestic investor stands right now. They believe that um, we've already seen the worst.
Mm-hmm.
It's just a matter of time when vaccine will arrive. Then once the vaccine arrives and the government reopens the economy, then we'll see start a strong recovery that will happen. I think that's basically the premise why domestic investors are still buying into the market.
Sir, how big of an impact will this ECQ, MECQ, have on your earnings outlook in 2021? Are there going to be, you can see on my terminal here the PE valuations, we're already, back to 24, in fact, at the beginning of the year, and then they were already back to above 18. Now they're sliding further and further down. To what extent do you see a difficult year when it comes to the corporate earnings, especially if we base it on the first quarter?
Definitely, we may be seeing some adjustments because of the lockdown, and in a way, economic growth will be much or recovery will be much slower as compared to what we earlier anticipated. Nevertheless, I think the adjustments. Um, will also, I think investors will just be focusing more on the arrival of the vaccines. And in a way, investors are basically they always look forward, they always look ahead. I think they've already seen what happened in because of the lockdown, and therefore, I believe that investors have already priced in the anticipated cut down in terms of their forecasts. And basically, what the investors are looking right now are basically when will the vaccine arrive, And
Mhm.
once they've seen a substantial arrival, then I think they're basically be looking forward beyond 2021.
Sir, can you say that restaurants and mall operators, the ones that of course are hardest hit by any form of lockdown, have now reasonably been able to pivot in the last year, have shifted to e-commerce sources of revenues, have shifted towards deliveries and takeouts enough for them to be able to sustain the recovery that they had started to see in the fourth quarter and first quarter, or will it again, be another story of a repeat of 2020?
I believe that most of the retail or most of the restaurant operators have started to adjust to the new normal. Unfortunately, while they've already shifted more towards more on delivery service, um, I think um, they need to also accept a certain level of number of dine-in customers in order to augment um, what they're basically earning right now coming from delivery service. I think 100% reliance on delivery service is not enough
Mhm.
for a lot of restaurant operators to sustain their operations. So I think the decision to slightly open um, uh, the restaurant to dine-in customers is a good step forward. I think in order to at least allow the restaurant operators to have an augmenting
Mhm.
flow coming from their delivery service.
Okay, so still a need for that reopening and face to face.
Yes.
For our final question here, a couple of IPOs on the pipeline. You've got Del Monte, the local branch of Del Monte, and you've also got Mondenissen. Will this be attracting foreigners to come back in? And should we be positioning for that liquidity that might be coming in?
I think that's a tough question. I think it all. I think these upcoming IPOs, they have their own strength, and admittedly can attract foreign investors. But I believe that it can be better if, in terms of the macro, they've seen that we also have some sort of signs of strong recovery, and that basically is an added factor for the foreign investors to be more aggressive in this coming IPOs. I believe that I expect that this upcoming IPOs will be successful, but I think it will be better if we our macro or
Mhm.
our COVID cases will go down, and that should at least further improve the appetite of foreign investors for these IPOs.
Okay, so it has to come in tandem, of course, with the economic fundamentals and the health crisis situation, being addressed. Thank you so much for those insights, Edser Trinidad, Head of Investments and Research of First Metro Asset Management. Checking in on the other headlines we're keeping our eyes on, online pre-registration for the Philippine ID system is now live. Starting today, you may go to register.philsys.gov.ph to submit your demographic information and to set your personal appointment for the national ID system. That's step one of the PSA's three-step process to getting a national ID. Step two is the personal appointment, where you will submit biometric information like fingerprint, iris scan photograph, and other supporting documents. Afterwards, you just have to wait for the delivery of your PhilSys ID at home. The national ID system is touted as a universal and centralized database that will make transactions more efficient and more convenient. According to the government, one potential application of having a centralized database is the swift, efficient distribution of government aid. But the public is reminded not to post their national IDs online when they receive it, so as to protect their privacy. Now, the PSE is expecting that the changes to the 2007 Philippine Mineral Reporting Code will be fully implemented within this year. The PMRC committee initiated the review of the current reporting code in 2019 to make it more internationally compliant. Now, some of the changes include changing reporting terminologies and introduction of technical studies and non-technical aspects in its reporting. The Chamber of Mines of the Philippines says the revision is timely after signing the lifting of the 9-year moratorium on new mining projects. At the same time, House Ways and Means Committee Chairman Joy Salceda wants miners to be, quote, taxed right. For the lawmaker, this means that mining firms must be taxed more through higher corporate income tax, local business tax, and real property tax, among others. Salceda explains that this is necessary so that the public can benefit from miners who extract the wealth from our land. And Meralco is extending its no disconnection policy in NCR Plus bubble areas until May 14th. This comes after the government decided to continue placing the area under modified enhanced community quarantine for another 2 weeks. The company hopes that the additional extension will help ease the burden of customers and will give them more time to settle their bills. Now, aside from this, Meralco will also remain considerate during the period and vow to assist its customers that they may need more support. During this time, Meralco says vital operations, including meter reading and bill deliveries, will continue as normal. And that's a first look into the business day. Today is Friday, April 30th, 2021. Catch Business World Live for the market close at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, and stay safe, Philippines. We are One News.